Okay, welcome everyone to the Binance Beach, the Aussie Weekly Crypto Briefing to get you up to date with the markets, local industry news, and what we're working on here at Binance Australia. I am stoked today to be joined by Patty from Crypto Tax Calculator. We're going to be covering a bit about how airdrops work and what you might want to be thinking about as we've reached the end of financial year and we approach crypto tax time. Patty, welcome.
Thanks, Liam. Great to be here.
Fantastic. Let's kick it off with a brief prices update for this week. And it's been a bit of a brutal one. In Aussie dollars, the Bitcoin price is down about 7% on this week, down to Aussie 85,354. I think this seems to be fueled by a bit of FUD around Mt. Gox, which has been going on for a couple of weeks now. Speculation about potential distribution of Mt. Gox Bitcoins. And also the German government appears to be potentially selling some Bitcoin as well. There's a few pretty interesting updates from Arkham there with on-chain analysis. Patty, how are you seeing the markets this week?
Well, I think it's been a brutal week all around, sort of waking up to a few red mornings. But luckily I'm comfy in spot, and it's a bit of a Christmas in July opportunity fire sale. So a few of my favorite coins are, at prices that I'm interested in buying them. So yeah, it's been good in that regard for sure.
Well, glad you're seeing the upside anyway. Hopefully we see a few more green candles next week. In terms of interesting local news and callouts from this week, next year, Binance is celebrating globally its 7th anniversary. So we have an event on the Gold Coast that we're going to be holding, a 7th birthday party. And so anybody who is located in Brisbane on the Gold Coast or does want to travel for that, please come and join us to celebrate 7 amazing years of Binance. Incredible how quickly this business has grown to be the world's leading exchange. And we're going to be playing games, hosting our users and giving away swag, merch and prizes. So if you can come, please do. I'd love to see you there. Another interesting call out from this week, Patty, was a Cointelegraph article that was about the data programs that the ATO is running this year. Given that it's right up your alley, I'd love to hear your take on the ATO and how it's looking at crypto tax this year specifically.
Yeah, Liam, definitely very interesting move by the ATO. I mean, we've always known that the ATO has, quite advanced surveillance powers. And they are obviously now starting to reach out to crypto investors in Australia to make sure, that everyone's staying compliant, everyone's reporting their crypto on their tax returns. So, just really enforcing the importance of, staying up to date with your crypto taxes, staying up to date with your reporting. You really don't want to get an email from the ATO sort of prompting you to do something and sort of realizing that maybe you've got years of transaction history that is unreconciled, and potentially, you've got a bunch of wallets and exchange accounts that you can't even access anymore, which could turn into a real nightmare. So it just really reinforces the importance of just staying up to date with things and knowing that, the ATO is looking into this stuff. And it's, it's a common mistake to sort of believe that the ATO is, doesn't know what crypto is, that crypto is, this anonymous thing that isn't getting taxed. But, the ATO is actually quite advanced and is definitely taking a look. So, yeah.
Awesome. Well, let's segue into airdrops. This has been the year of airdrops this last financial year, and we saw a lot of excitement from users across a whole bunch of really interesting, innovative and new protocols. Some users got some pretty significant airdrops, lucky them, but let's cover a little bit about what people should be thinking about if they did receive an airdrop from a tax perspective. So first up, is an airdrop taxable? Should you be paying tax on your proceeds?
Yeah, great question. And you're going to love the answer to this one. So it depends. And I mean, back in 2022, the ATO released guidelines on airdrops specifically. They kind of broke them into two different categories. So the first category being initial allocation airdrops. So that is like airdrops that are sort of part of like an initial distribution. The token has never been traded prior to the airdrop. And basically, for tax purposes, the ATO says that these are treated as like a zero cost acquisition. So essentially, you're receiving these tokens, without having to pay anything for them. So their cost base is zero. What that means is in the future, if you do decide to dispose of them, then the full amount of your proceeds is considered for capital gains tax, or CGT. So that's sort of the first category there. And the good thing for Aussies with that category is that the initial, airdrop transaction, going into the wallet isn't actually taxable. On the other hand, there's the second type of airdrops, which the ATO considers, and it's sort of, you can kind of think of these like the phase 2 airdrops, or the airdrops that, the token's already been trading, and then, the airdrop kind of happens after that point, potentially, for marketing reasons, or it's like a phase 2 of a campaign, that sort of thing. The way the ATO considers these ones is at the time of receipt, the fair market value of the tokens is going to be treated as ordinary income. So that value then, has to get added onto your income and your tax return. And then beyond that, if you were to go to sell those tokens in the future, there is also tax consequences there as well, which we can maybe touch on later.
Awesome. So let's run through a couple of really simple scenarios so users can wrap their head around what kind of taxable implications there might be. You receive an initial airdrop of 1,000 tokens at $1 each. The price goes up to $2, so you have a $1,000 capital gain there, and you choose to sell. How would you be looking at that from a tax perspective?
Yeah, good example. So if we consider like these two different categories of airdrops, so in the first case, let's say it was an initial allocation airdrop. Basically, you get those 1,000 tokens essentially for free. So at that point, they're assigned a zero cost basis. And later when you sell for $2,000, basically that full $2,000 is subject to CGT. Now in the second case, so those tokens were, trading prior to the airdrop. And, this is like a phase 2 airdrop. When you receive those tokens into your wallet, as you said, they're worth $1 each, or $1,000 total value. That $1,000 is going to be treated as ordinary income. Now, when you go to sell those tokens later for $2,000, there's now the difference between the initial $1,000 value at which you received it, and that's going to form a cost basis, and then the $2,000 which you receive in proceeds. And it's the difference between those two numbers that is now forming a gain, and that's going to be subject to capital gains tax. So in that instance, you have $1,000 treated as ordinary income, and then another additional $1,000 treated as capital gains.
Sure. That was nice and simple. Thank you. What if we look at it from the opposite perspective? You're issued 1,000 tokens at $1. Unfortunately, the token launch doesn't go as well as the company or the foundation was hoping for, and the value of those tokens falls to 50 cents or $500, and you choose to sell. Can you claim that capital loss, or how does that work? What should you be thinking about where you've lost money from an airdrop?
Yeah, definitely. This is a great question. It comes up all the time. It is, in Australia in particular, this situation can be a bit tricky. So, in the first instance with these initial allocations, again, basically you're just going to be paying, or just that $500 of proceeds is going to be subject to capital gains. So nothing too, peculiar there. But in the sort of second case of airdrops, these phase 2 airdrops, as I'm sort of referring them to, in that instance, there's definitely like a fair bit to consider. So on the first point you receive them, they're worth $1,000. So again, it's the same as before. You have to report that $1,000 as ordinary income. And then obviously the tokens unfortunately dropped, and in the scenario, it drops down to $500. So in this case, you have realized a $500 capital loss. So basically, you've only ended up with $500 in your pocket. But the important point here is that the first $1,000, which was ordinary income, it actually can't be offset with the capital loss in Australia. So it sort of creates this tricky situation where you actually have to report $1,000 of income, but in reality, you only got $500 in the pocket. And while, yes, you can use that capital loss to offset any other gains, if you don't actually have any gains to offset, then, potentially you're in quite a tricky situation there. And, if you sort of, grow the numbers a little bit, it can actually turn, quite serious. And we know crypto is quite volatile. So, you can even experience even greater drops and potentially even be paying more tax than what you received in the airdrop.
Which I imagine would be pretty painful and would make you rethink how valuable receiving free tokens from a protocol might actually be for your bottom line. Let's talk quickly about the scenario where the token is trading on secondary markets. How do you define a secondary market? Obviously, there's when a protocol initially launches a token, there might be VCs who receive tokens, might get lockups. Prior to retail being given an airdrop. Sometimes tokens are trading like pre-market, where there's, for example, the Kelp example, trading eigenlayer points ahead of time. So what actually constitutes a secondary market? At what point do we go, okay, there has been the first drop and now we're on to secondary?
I think that, from the ATO's point of view, I would say that that's quite a gray area, especially in regards to the pre-market stuff. So you would sort of need to really speak to, if you're going to argue something like that, either way, I would say you would need to speak to probably a tax professional, a tax lawyer even, depending on the exact situation. But if you refer back to the ATO's web guidance, they are calling it they're sort of referring to initial allocation airdrops as the initial distribution. So you would assume that, the way I sort of think about it is, if those tokens that you're receiving have never been floating around the market already, then that's likely to be considered an initial allocation. So the sort of pre-market trading probably wouldn't, cause any issues there, I would say. But again, depending on your situation, depending on the exact airdrop, it could change. And it's important to have your arguments in terms of, which way you're going with the treatment.
Of course. You covered one earlier, but there are definitely scenarios where users could get caught out by not considering their tax positions throughout the course of a year. Talk to us about the scenarios where users could get caught out with airdrops specifically. You mentioned one where potentially if you're selling at a capital loss and triggering a taxable event that's greater than the value of the initial airdrop. How can people make sure that they get this right and they don't put themselves in those positions?
Yeah, definitely. Great question. So, there's sort of a few things here. When I say that, potentially you could be in a situation where you're paying more tax than the value of your airdrop. That is a more extreme case, of course. And it does obviously depend on sort of your marginal income tax bracket as well. But to avoid those sort of situations, you really need to be staying on top of your tax position throughout the year. And whether you do that manually or whether you use software like CTC, or whether you're sort of regularly checking in with your accountant, sharing, your transaction history, sharing, with them what you've sort of been doing, on chain, off chain, and just being really meticulous in your record keeping, and just, being quite aware about your entire tax situation, even outside of crypto as well. So like obviously your income and other investments can also influence what marginal tax bracket you end up in. So that's also something to consider there. But I mean, in terms of these sort of airdrops or even any sort of crypto activities that are triggering, that are being treated as income from the ATO's point of view, these are the things that you really need to be across, and just be very aware that, even if these tokens go to zero, you still actually have to report the numbers as your income. And if you don't have gains, to offset with the losses, then it can put you in a really tricky situation.
A lot to think about for users, particularly as we head into what is hopefully a few more green candles in the next couple of months, and a bit more of a positive end to the year than we're having right now. Thanks so much for your time, Patty. It's always great to get your insight. And we actually have a partners offer for Crypto Tax Calculator for our users this tax season. I believe you can get 30% off the tool, which is a fantastic offer. So thanks for providing that as well. I know our users really value it.
No problem.
Easy. All right. Well, thank you so much for tuning into Binance Beach this week. I hope you enjoyed it. We'll be back next week. So come grab a deck chair, sit down, and we'll talk crypto. We'll announce who our guests and our topics will be very soon, probably on Monday. But let's make sure that you please like, subscribe, and stay engaged on our socials. Please ask questions of our experts so that we can make sure these sessions are as valuable for you as we possibly can. I need to finish with a disclaimer. Please note that the discussion today includes insights from non-affiliated third parties and key opinion leaders. Binance provides this platform for informational and educational purposes only, and is not responsible for any content or insights that are provided. The information should not be considered as financial, tax, or investment advice from Binance. Have a fantastic weekend, Binanceans. We'll catch up with you next week. Cheers.